A relatively tiny amount of money invested into a super high quality dividend growth ETF like this right here, DGRO, could have the potential to set an investor up forever in the future. Now, this is because compounding machines like DGRO not only has went up in price over time, but also pays investors dividends every quarter, and on top of that, over time at least, has paid more and more in dividends year after year after year. Now in this video, we're going to break down DGRO, the iShares Core Dividend Growth ETF, and explain why I think this could be an amazing wealth generating vehicle for a dividend growth investor to build a massive portfolio later on, especially if they don't have all that much cash balance to work with. Then later I'm going to break down the exact numbers and show you how just $10 a day, yes, $10 per day, invest into DGRO could potentially set an investor up for the rest of their lives. Now if this interests you at all, make sure to please drop a like down below, stick around, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So before we go over the exact numbers, why DGRO, why the iShares Core Dividend Growth ETF, why is this a good example to use, and why is this a good investment vehicle to ride until retirement? Well, like I sort of talked about in the intro, DGRO has a high quality basket of holdings that has not only propelled this ETF to more and more all-time highs over the years as far as price return goes, but also, like I talked about, this ETF does pay a dividend to investors on a quarterly basis, and over time the dividend has been getting larger and larger. Like for example, back around 10 years ago, this ETF was paying around 17 cents, 9 cents, or 17 cents on a quarterly basis. Now 10 years later, we're talking 39 cents per quarter, 37 cents, and just as of recently 31 cents. So more or less 3 times as much in dividend income that investors would receive around 10 years ago. So that means that in theory, for every share that you had, you are now getting paid 3 times the amount 10 years later. Now, before we go over the exact numbers of how $10 per day can compound into a massive portfolio, let's first dig a little bit deeper into DGRO and explain what this ETF has to offer and even compare it to some other super high quality ETFs across the market. Now, this ETF is of course nothing new. It has come across my radar for years now, and there's not really a great reason on why I don't own a ton of it already. I honestly wish I did. But this ETF for the most part offers a lot of the same things that SCHD offers, but only in some ways does it even better. But right here on the iShares website, it says why DGRO. It says DGRO offers low cost exposure to US stocks focused on dividend growth, access to companies that have a history of sustained dividend growth, and that are broadly diversified across industries. Now, dividend growth rate is honestly one of the most important metrics that I really try to keep in mind building out my long-term dividend growth portfolio. And this is simply because as I inch this portfolio further and further north as far as total monthly and total yearly dividends, if I buy into assets like DGRO or like SCHD for that matter, that at least historically have paid more and more in dividends over time, it's going to give the portfolio a boost in dividend income without me having to purchase another share, which sounds amazing. Now, one of the main reasons I am actually very interested in making DGRO maybe possibly my future daily buy as far as a dividend growth position is the fact that the top holdings, in my opinion, are honestly a lot like SCHD, only better in certain ways. Now, I say this because there are definitely some familiar faces in here, a lot of different stocks that SCHD also holds, of course. But there's also different top holdings like Apple and Microsoft, which actually make up around 6% of the overall ETF, which I like because as a younger dividend growth investor, I think these names are going to give DGRO some massive growth potential long term. But honestly, simply put, I'm a huge fan of the top holdings in DGRO. SCHD has an amazing strategy, has had amazing dividend growth historically, and some good price return on top of that. But the top holdings in SCHD are not necessarily what I would call the best top holdings across the market. And although DGRO also maybe doesn't have the best, I do think that overall, comparing top holdings to top holdings, they're better than that of SCHD. But looking a little bit deeper into this ETF, of course, it's been around since around 2014 and is up around 128% as far as price return goes. The expense ratio is very cheap, basically just like SCHD, 0.02% more expensive. We already talked about the fact that I'm a huge fan of the holdings, and the sector breakdown is a little bit more advantageous for a younger investor if you ask me. But one thing that I will say DGRO compared to SCHD, I will say SCHD might win, is the fact that there is a larger starting yield, which again for most investors is not really going to make that much of a difference. But if you are an investor in my shoes, where I personally possibly want to somewhat retire maybe in the next few years, or if not retire, what I mean by that is use some of my dividend income to cover bills, maybe vacations or other things. A starting yield of 3.5% where SCHD is at versus 2.35 where DGRO is at is going to make somewhat of a difference, at least in the short term. But long term, it's not really going to make all that much of a difference. And on top of that, the dividend growth rate for DGRO is significant, 10.3% over the last year. And of course, DGRO doesn't have that much history to go off because it is a relatively new ETF, but we're at 9.7% 5 years as far as dividend growth rate, which means that just like SCHD, this dividend has gotten bigger and bigger over time. Now, for an example, this around 10 years ago, this ETF was paying around 17 cents on a quarterly basis. And just as of recently, we saw as high as almost 40 cents, 37 cents, and just as of recent, 31 cents. So the dividend has over doubled in the last 10 years, which is exactly what we're looking for here. But here's the real magic. This is very important, so listen in. This is something that I don't think a lot of dividend growth investors really realize. DGRO's performance over time has been outstanding. And this is even compared to some other heavy hitters across the market. Like for example, with a $10,000 investment with dividends reinvested over time, over the last, say, 9.9 years, DGRO has returned 186%, or on average 11.23% per year, where SCHD during that same time frame, same amount invested, has returned 181% and or 11.04% average total. So obviously either one of these investments over the last 9.9 years would have been amazing, but it is safe to say, and just to be fair, DGRO does win. And this is not even just comparing DGRO to SCHD. If we compare DGRO to another super high quality dividend growth style ETF, we're talking about VIG here. VIG over the last 9.9 years has returned 179.45%, or around 10.94% per year, which again, of course, is not bad whatsoever. But once again, DGRO has returned 11.23%, which outperformed VIG. Now, even a high quality dividend growth ETF that's outperformed many other of its peers still maybe has met its match. On the 9.9 year time frame, we're looking at an 11.23% average annual total return from DGRO and a 12.34% average annual total return from SPY. But what's crazy is that DGRO has performed very close to what SPY has offered and has paid more dividends over time. So for investors that are looking for some more income generation a little bit quicker than what SPY offers, DGRO is also comparable. So now that we broke down DGRO, you saw it even outperform other super high quality popular dividend growth ETFs across the markets. And it's pretty obvious at this point that DGRO is a compounding machine. For this example, I promise that just $10 per day, more or less, could make a small portfolio into a massive one later on in the future. If, of course, an investor bought into DGRO, and of course, if it kept performing like it has historically. Now for this example, and keep in mind, this is just an example, this is all in theory, take it with a grain of salt, a $10,000 starting portfolio with $36.50 added per year, so $10 per day, a 2.3% initial yield, 10% annual dividend amount increase, 8% annual share price appreciation, 30 years invested, quarterly distributions, and DRIP being turned on. Let's see what DGRO could get an investor if they just contributed around $10 per day into a high quality dividend growth ETF like this one. So the numbers are in. Year number one, a $10,000 portfolio could earn around $237 per year in dividends. And of course, after the principal increase and after the contribution, this portfolio is now almost at $15,000. Now, years later, 10 years in, this portfolio is already up to $73,000 with $2,000 per year in dividends. And after year 10, we're at $85,000. So 10 years from when you started, this portfolio is nearly crossing the six-figure mark. By 20 years in, of course, this is if an investor has a long time from ahead of them, because like I always say, especially in dividend investing, you either need a lot of time or you need a lot of money, and it definitely helps to have both. But 20 years in, we're at $262,000, all which would started with a $10,000 portfolio and $10 per day, and almost $8,900 per year in dividends, all the way at the bottom at the end of 30 years. So if you're currently 20 or 30, let's say you have 30 years ahead of you, a $10,000 portfolio would now be worth $912,000 after 30 years investing $10 per day and letting DGRO compound over time. So all this proves and all this goes to show is that if you invest in the right vehicles, they could definitely have the potential to turn a tiny portfolio into a massive one later on down the road. And the beauty of this is that, of course, if you add more money per year, and if DGRO goes up more in price or has a bigger dividend increase, the numbers are only going to compound bigger and bigger. I want to know how much on a daily basis, on average, you're investing to your long-term dividend growth portfolio. If you're comfortable, drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.